Good evening, everyone, and very warm welcome. My name is Bassem Fawzy, Vice President, Elixir Wealth, DIFC. If you're here today, it's likely because you face a challenge shared by many. You want your investment to grow and provide for your future while ensuring they remain fully compliant with Sharia principles. Balancing performance with compliance can feel complex and sometimes overwhelming. That's why we've created this session. Over the next 40 minutes, we'll move from theory to practice, giving you a clear framework for how Sharia-compliant investing and protection solutions really work. And to guide us through, I'm delighted to introduce our distinguished guest speaker. We're honored to be joined with Mufti Faraz Adam, a leading voice in the world of Islamic finance and fintech. Mufti Faraz is the Executive Director and Head of Sharia Advisory at Amana Advisors in the UK, where he provides guidance to Islamic financial institutions around the world, from the UK and North America to the Middle East and Southeast Asia. His expertise spans Islamic banking, capital markets, Sharia-compliant insurance, SME financing, and Islamic social finance. What sets him apart in his remarkable combination of traditional scholarship and modern financial expertise. Mufti Faraz also a thinker and an author, having recently published Introduction to Islamic Fintech alongside numerous research papers on complex Islamic finance products. So without further ado, please join me in welcoming Mufti Faraz Adam. Mufti Faraz, thank you for being here. The floor is yours.
No, thank you so much for inviting me. It's an honor and a pleasure to be with you on this platform, and I'd like to thank yourself and your team for setting this up.
You're welcome. So, Mufti Faraz, I'll open this to you. Sorry, I didn't tell anybody. So, Mufti Faraz and I, when we spoke to prepare the session, we decided that the best thing that we will fall, that we'll lean on the questions that you posted to us prior to this session. We had amazing questions, and actually putting them together, this gave us enough material that we talk about, and we keep Mufti Faraz talking for the next 40 minutes. And due to his time, we're gonna have to have a hard stop at 40 minutes. If we don't get to your questions by then, please feel free to reach out. I'll be happy to communicate with Mufti Faraz and get you the answers that you're looking for. So, Mufti Faraz, as we were talking, uh, lots of people talk about Sharia investment, Islamic finance, but I was surprised to know that not a lot of people know exactly what it is. Can you please help us out?
Yeah, Bismillah ar-Rahman ar-Rahim. So, Islamic finance is an entire ecosystem
Hmm.
where the idea and goal is that money should work for you effectively. We're looking at smart money, and what do I mean by that is money should be value adding in the entire ecosystem and value chain where money flows. That's really what Islamic finance is about. There should be no leakages. And what do we mean by that? Let's now kind of quantify that and understand that better. Any sector which causes harm to humans should not have money flowing into it. So, for instance, in the Islamic finance ecosystem, you won't have alcohol being financed, invested, or as a business running and operating, or funds flowing from Islamic funds. Tobacco will be excluded because these have physical harms, which are known, scientifically known and tested and proven as well. Any other immoral vice sector, sin sector is also excluded. So the idea is Islamic finance as a system works to empower human beings, and we don't want anything to be funded, powered in the environment which has an adverse effect upon the human being. So it's really building a better world. And that is because wherever your money flows, that naturally gets an uplift and also grows. So we want money to flow in positive industries, positive sectors, positive businesses, not value extracting or value diminishing businesses. That is the entire kind of Islamic finance system. And one of the key markers then, when we're trading money or there's cash flows happening, What we want is an exchange to take place where both parties actually gain. This is at the heart of the Islamic system where any transaction you enter in, both parties should win. There should be a win-win. There is no zero-sum game here. So
Hmm.
if I'm selling to you and you're buying from me, we're both giving, we're
We're
both
both winning.
exactly. It's a win-win.
Hmm.
It's not that I am taking something from you and your gain is questionable or uncertain. It can't be the case because I'm a
Hmm.
guaranteed winner and you may win, you may lose. Now, that setup, that disparity, that asymmetry between us is what
Hmm.
Sharia completely removes. That's why gambling is prohibited, interest-bearing transactions are prohibited, because in an
Hmm.
interest transaction, the lender is getting their return for sure, but me borrowing the capital I have, will I gain, will I lose? It's not certain in that particular
Hmm.
transaction.
Hmm.
But I'm definitely indebted from day one.
Hmm.
These types of transactions are all out. Likewise, a third famous prohibition in the transactional space is the prohibition of gharar activities, in Arabic, gharar, which is uncertainty. So I
Hmm.
can't take part in any endeavor where the gain, return, benefit is contingent, uncertain upon something else. Right?
Hmm.
Contractually, it's contingent, uncertain. And that's one of the primary objections against contemporary insurance that we have, where I'm paying all these premiums through
Uh-huh.
15, 20 years, but I've not really received anything tangible. This peace of mind or security is not something tangible I've received yet. I
So
was
unless you go
as
and hit the car or get something like,
exactly.
mm,
So that's the reason why there's objections on the way that particular sector works. Yes, a mutual, a cooperative, or a takaful setup is fairer
hmm,
than the insurance kind of structure. So that is really what Islamic finance is as an ecosystem. If we just zoom in a little to investing, because
hmm,
Islamic investing now is really an extension of the Islamic finance ecosystem. So when it
hmm,
comes to investing, we just want to make sure that money is channeled towards the same types of businesses which are actually value adding and not to
hmm,
those businesses or instruments which are negative or which have been structured in a way where there's this zero sum nature to it, or the businesses, if it's a private equity or venture capital or public markets or private markets, the companies themselves should be doing something good. That's the key
hmm,
focus, something good which aligns with our values. It's ethical, it's aligned with a better world, effectively. And
hmm.
then once the business is aligned, then there's some guidance and criterion. Okay, into what if there's some interest exposure? What do we do with that? What if we can't avoid that? What's the kind of like approach to that? So that's where some
Right.
Sharia criteria have been developed to deal with some real world circumstances that you cannot avoid at a particular moment in time. But
Hmm.
effectively, the goal is to have zero debt exposure, zero interest, and have a fund or an investment which is equity and without any exposure to riba and debt altogether. That would be like the best solution and the best outcome.
This is amazing because actually this is one of the questions that we received already, and I'm just going to read it. So it says the question goes, when constructing a Sharia-compliant portfolio, how should an individual or an investor balance between growth assets like equity and ETF and the income-producing assets such as sukuk?
Hmm.
This is one question. I have actually have three questions in that space.
Okay. Yeah, so on this particular query, now everybody has a different goal. Like when you start investing, you'll have a particular goal. What are you
Of
investing
course.
for? Is it,
Hmm.
education? Is it retirement? Is it, marriage? Yeah.
Hmm.
What's your goal? So based
Whatever it is,
on
yeah.
your goal, then your kind of appetite, whether you're going for a moderate risk or you're going aggressive or you're going
Hmm.
conservative, that will naturally impact then the constituents of your portfolio and the kind of
Yes.
balance of your portfolio, what
Hmm.
assets there are in. But see, from a Sharia perspective,
Yeah.
Typically, on the more aggressive side and the more,
Hmm.
say, the growth side, you have ETFs and global equities. This is like the
Hmm.
two major instruments that you see,
That's right.
which power that side off
Of
from
course.
a perspective. And when we're looking at more income and stability, although the returns are lower and the risk is lower,
Hmm.
but
Hmm.
it's more of like it's safety for investors. And then you're looking at things like sukuk typically. And there's
Hmm.
sukuk are like the perhaps the most dominant type of product that align there. So you'll have a bit
Fixed income.
of
Yeah.
sukuk, you'll have a bit of gold and commodities, perhaps, and precious metals. And then you might have some holdings with a Sharia bank, for instance, which will have
Hmm.
a modest return where your monies are safe. And then you might have a mix. So typically in a growth income scenario, if you want to start thinking about growth and income,
Hmm.
you want to split at a moderate risk, you're looking at a 60-40 split. Typically, that's what you see in the industry.
Hmm.
Or and if it's aggressive, very common to see like an 80-20.
Like,
So
or more.
80% you're seeing ETFs and global equities, your
Hmm.
20% is your sukuk and your holdings in Sharia compliant banks.
Hmm.
And then if you're looking for something more conservative, then a 40-60 kind of split, 50-50 split is what you typically see in the industry. But this is obviously, it all comes down to your risk appetite, your investment goal, and what you're
Hmm.
trying to achieve. Every person at every stage of their life, there's a different
It's
need,
different. Of
right?
course.
So it's investing is like a menu or having a
Hmm.
meal in a restaurant. Yeah? You
You
have a
can follow the
starters, you
manual.
have a main course, and then you have a dessert. And
Exactly.
everything has a different price to it and has a different feel and has a different risk return. Yeah. The calories
Exactly.
in one meal, the dessert might be so
Yeah.
nice, but the calories on that dessert could be far greater than your starters, for instance.
But you may not sleep for a couple of days until you or a couple of nights until you're good.
Exactly. So investing is a similar kind of approach. And there's a lot of parallels in food and in finance. A lot of the terminology that's used in finance, you see similarities with other industries which we're accustomed to and which we are aware of. So nevertheless, this the portfolio, the approach, your investment target, it all comes down to yourself. And that's when you typically gain advice or seek advice and counsel from somebody who's an expert in this area, who's a practitioner, who's an advisor. They would obviously help you more. Or you go to
Hmm.
a robo advisor that people do nowadays, which is very,
Or
yeah.
or they come to us. So the reason why I asked that question, well, I understand this question because I've seen some of my clients, especially in Canada, more so than here. Uh, they travel with the idea that okay, well, it's a market. There's not enough Sharia compliant investment, but they have it in their mind that they have to be 100% equity and that's basically constitute a Sharia compliant. And I'm not out there to tell anybody it's not my space, but I mean for my knowledge and everybody else's knowledge, uh, there are options out there, and that would lead me to the next question. That many of the big asset managers like BlackRock, iShares, Vanguard now offer Sharia compliant funds like ETFs that track the S&P 500 Sharia index for investor who wants something straightforward and accessible, because we have to agree to structure a portfolio yourself, right? It's a lot of work, a lot of knowledge. Even for me myself personally, I'm the professional in that space. To structure a portfolio from scratch is a lot of work, a lot of knowledge, and it gets costly. You know how far we can go, but there are other solutions out there. The question regarding these particular, well, not these particular ones, but in general the off-the-shelf product, uh, is it a good option to start with for someone who just wants to invest or start investing without, you know, going through the trouble of analyzing companies? This is good company, this is not good company, this is a fit, there's no fit. What do you say about those products?
Yeah,
And again,
so
so can I just make a disclaimer? I should have done this at the beginning. For everyone sitting here with us this evening, please do not take anything that we say as an investment advice. There is a lot of process to receive an investment advice, so nothing here constitute investment advice. Sorry, Mufti Faraz. Go ahead.
oh, thank you so much for that
Mm,
disclaimer. Very
yes.
important.
Mm,
So I mean the first point about only equity, that's not entirely accurate.
Mm-hmm.
There is Sharia compliant debt products as well. Certain sukuk are structured as debt.
Mm-hmm.
Certain sukuk are more equity. So it's absolutely fine from a Sharia perspective as long as the structure is done in a Sharia compliant way. You're
Mm-hmm.
good to invest. So it's not true that it has to be only 100% equity.
Mm-hmm.
As far as your second query is concerned, then it's again for most people nowadays, we're working, we work 10 hours, 8 hours, we're in the office, we're traveling, we're moving. Um, do we really have the time, the energy to construct, manage our own funds? It's a real question. Or
Mm-hmm.
are our money simply sitting in our bank accounts for months on end and we haven't done anything about it, right? And we've not
Mm-hmm.
invested? That is, I'll be, in all honesty, many people that I personally know and I've spoken to, it's common for people just to sit on cash for years on end, right? Very
Mm-hmm.
common. And they want to invest and they keep saying, I will invest, I will do something, I need to, put my money to work and I need to kind of like earn passive income and this, that, the other. uh, Either they end up getting scammed by somebody who just comes along and says, you know what, give me your money and there's a very good opportunity here. There's a 20%
Mm-hmm.
return, 30% return after 6 months, and I'm your friend, gives you, and the person he believes him, he gives the money and he's lost.
Mm-hmm.
Or they just start putting, money into equities without understanding what they're doing. They hear, yeah,
And we've seen that a lot, yes.
yeah, the stock is going up. They hear some friends saying, say, oh, let me put $500 or $1,000 here. But
Mm.
in the end, what happens is they become almost pessimistic on the entire thing and start saying, "What is happening? I've not really gained anything. It's just going up and down. I've not really gained." That's because
Mm-hmm.
the approach was actually wrong. Uh,
That's right.
so for many people, I would say, it's always good to first test and understand. Like you have to, and even investing has a lot to do with emotions and your human psyche.
Which is the worst decision ever, to invest based on emotions.
Exactly. But it's like
Absolutely.
many people are not aware of what happens to them when they see money losing in front of their eyes.
Mm-hmm.
It brings out a different, personality within yourself, right? When the
Mm-hmm.
first
Mm-hmm.
time you're hit with a $1,000 loss on a holding and you've put in 4,000,
It's
that can
25%
really
of it.
impact people. Yeah, just to
Mm-hmm.
stomach and swallow that kind of like loss. Because
Mm-hmm.
you perhaps never seen in real time losing money in that way. And there's
Mm-hmm.
nothing you can do about it, right?
Mm-hmm.
So that's why investing is really learning about yourself. When you're investing,
Right.
there's a lot that you learn about your own self. So it's always good. And I tell people who ever ask me this kind of like a point is you have to, it's educating yourself as you invest and
Mm-hmm.
even educating yourself about yourself as you invest and getting to know yourself more, understanding your risk tolerance because you may think, yeah, well, I want to go long and I want to go into an aggressive portfolio and yeah, I want to make 15%, 16% this year, but you don't have the
It's
stomach.
not realistic.
Yeah,
Mm-hmm.
or that roller coaster for you is just doesn't work, right?
You know, one of the biggest things that, this is gonna, we're gonna shift a little bit away from the main topic, but since you brought this up, um, so I've been doing what I'm doing for the last 30 years, and I met all kinds of situations and families. But a certain situation, which is a certain family event, that to your earlier point, you see the true person when the person realize, oh my God, I never saw this one. Uh, when people come across large sum, okay, regardless of how they came upon that day, like you wake up in the morning or they wake up in the morning and they're $2 million rich, right? Take a look at what happened there. You get some people, they're grateful, they thank God for it, and we're done. They just move on with their life. This money is for our family, whatever. And you get families falling apart over the same amount of money. And it is what it is, but it's a human nature, right? But working, as you said earlier, with someone who can guide you through this is paramount, especially that when you're sitting with a group of people, you only hear people saying, we won this much, or whatever, I created this much money out of ABC stock, or whatever the case might be. You never see someone sitting in a sitting and saying, "Oh, I lost this much money in an ABC stock." You don't hear that. People brag about their gains and they say nothing about their losses. Unfortunately, when someone is new to that scene, only travel with the winning scenario and the happiness and the excitement, but they never saw the other part. So holding hand is the most important thing, and that and education, education, education. That's what we're trying to do here. As I said to you earlier, every single month we have an educational event just to prep people and just to see a different look or have a different outlook on their finances. But to my earlier question, off-the-shelf Sharia-compliant funds, should we assume that the makers have gone through the process to call it a Sharia compliant fund?
Yeah, so typically in these types of reputable organizations and institutions,
Yes,
they
yes,
typically have a Sharia board in place. They'll have scholars who've reviewed, scholars will be working with them, ensuring that the portfolio, they have an investment policy which is Sharia compliant. So it's a Sharia
right.
policy.
Mm-hmm,
And then even their asset classes that are selected, there's an entire screening mechanism that's there in place.
mm-hmm,
All Sharia compliant stocks are part of the kind of like basket of equities. Uh,
mm-hmm,
and that then review is an ongoing thing with the Sharia board. So as long
mm-hmm,
as a firm has a Sharia board, it's certified,
mm-hmm,
and the product is being audited along,
mm-hmm,
it's good to go. It's something off the shelf you can definitely
mm-hmm.
benefit
So
from.
they don't, so nothing further they need to do, just basically follow their investor profile, whatever the case might be, and we're fine at this point.
That's it.
So this will take me to my next question, and this is something I asked you the first time, and that you never told me, by the way. Um, so how do Sharia indices, I'm just put it in an easier way, how do Sharia indices like the S&P 500 Sharia or MSCI Islamic indices actually compare in performance to their conventional counterparts? And what should the investor keep in mind when making that comparison? I know the answer,
Yeah,
but I'll give this to
yeah. So
you.
these returns are the returns they've developed is very comparable to their conventional peers. If you look,
I think it's higher.
yeah, yeah, definitely for sure, for sure.
They are higher. I don't know what they do, but they are higher. Hmm.
And so, I mean, one of the reasons why is if you think about it, they've a Sharia index is away from your highly leveraged type of products.
Hmm.
Have different types of exposure now. You're diversified further. There's less exposure to companies who are in financials and other things, which has a impact upon the index itself, which we see.
Hmm.
And even in, you could say, financial crises where banks are typically hit or
Wants to hit. Yeah.
the Sharia indices there are typically performing better because they don't have the same exposure.
Mm-hmm. That's yeah. So I really couldn't understand why, but I mean, I compare to both, and like, okay, it's pretty strong. It's pretty strong. Okay, so that will take me to um, another question. And this one here again, we're not exactly shifting gear, but we're going to talk about protection.
Mhm.
So we talk investments, and for most people, to grow wealth, you save, you invest, you protect your against inflation and so on and so forth. And we're talking in particular space of Sharia compliant investment. However, we didn't talk about the protection, takaful. So before I put in my question, I'm going to leave it with you because I know one of you advise takaful companies. So please tell us a bit more about that and how this is on the Sharia space. And you know what? I'm going to put my question out there and about the indices backed takaful policies.
Mm. So, I mean, when it comes to takaful versus insurance, the
Hmm.
problem from a Sharia perspective with insurance is that you're buying and selling cover effectively. Now, that from a Sharia perspective is something that cannot be traded or sold. The policyholder is not really buying anything which the Sharia sees as something valuable that you're actually gaining. Peace of mind, security, and these things are not something that's bought as part of a transaction. That's an emotion with yourself. It's not something that the counterparty gives you. So what's happened is, as a result, a better structure has been developed over the decades, which is takaful. How takaful works is it has the same goal. Protection is the goal, But instead of you buying and selling and having a counterparty where there's an exchange, rather you are now pooling your funds together with other policyholders. The takaful operator, which is like the insurance company, manages this pool of funds, settles claims, and also invests a portion of these funds for the benefit of the policyholders. And then you are indemnifying yourself. So you work as a pool together, and you contribute, and you say, look, okay, all of us, let's put our money together. If any one of us faces any kind of calamity or loss, then we all agree to support that person. That's what's happening in a takaful. This takes multiple forms. It can form as a mutual, as a cooperative, or other forms. But the concept is that it's more of risk sharing as opposed to risk transfer. And that I would say is the key point here.
So you're saying so in a regular insurance, it's not risk sharing. It's basically I'm passing my risk onto the company or I'm passing the risk onto the others. That's why in the premium calculation, if I have certain illness, I pay more because others are not gonna pay for me kind of thing, right?
Yeah, exactly. And so in a even though like technically even from an insurance perspective, you're not really transferring risk per se. You still have to face that risk, but it's that the financial losses related to that risk are covered. And that's really
Mm-hmm.
what's being traded here. So in a takaful, it'll be very similar in terms of what's covered, how things are covered. But there's, I would say, two. So one is a structure difference, which I just mentioned. Structurally,
Mm-hmm.
takaful is different to insurance. But two
Mm-hmm.
other things which are major differences. One is the types of risks which are underwritten. So in takaful, they will not underwrite risks which are obviously not Sharia compliant. So you won't have, if it's property, for instance, a pub or a casino will not be valid in the underwriting process. And anything else which is not Sharia compliant will be out of the under completely screened out and not be in.
It's not covered, period.
Yeah, there's no coverage for it at all whatsoever.
Mm-hmm.
And secondly, well, how investments are made, the investment arm of it, and that's typically you see in a family takaful. So you have like in conventional insurance, we have insurance and then we have life insurance. In takaful, they have general takaful, which is your annual kind of like day-to-day kind of insurance. And then you have family takaful, which is your life insurance, because your family now is benefiting from the proceeds and gains.
Mm-hmm.
So it's more that in the family takaful you have an investment arm. So
Mm-hmm.
in the family takaful structure, you'll have one pool of funds which are there to meet claims, another pool which is there for investment purposes. And so that's how the investment side happens more in the life insurance, the family takaful side of things, not in your
Mm-hmm.
day-to-day kind of like takaful operations.
Mm-hmm. So yeah, so I see some insurance solution today. They have they're backed with again like as I said earlier with indices such as the S&P Sharia, and I was about to ask your view. I guess you already gave us your view on that, right? Okay, great. So my last question, or the last question that I have here, and this is I'm really excited to hear this from you. It's about the innovation and the future trends. So with the emerging asset classes like tokenized real estate, Islamic fintech products, where do you see the biggest opportunities for Sharia compliant investors in the next decade?
Yeah, I guess that what we're seeing right now is we're seeing a shift in heavy concentration in AI companies. That's what we're seeing.
Yeah. That's
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 where
my next
all
question.
yeah, so this is where
That's my next question.
gain is. So I would say
Hmm
the two that from a sector perspective, you're seeing digital assets, tech, and AI. That is really the space where there's innovation and there's a lot of money now being concentrated in these areas because these are growth opportunities,
hmm
especially AI, because we're on the literally on the cusp of something which we all now facing, experiencing, and seeing. But this is just the start. Yeah, this is just absolutely the start. Um, so that's one place. But second is more about digital assets and tokenization. The thing about digital assets is we might not understand its value where we are because we have access to all types of instruments and asset classes most of the time.
Mm-hmm.
It's but the real value add of these asset classes is in countries and emerging markets where access to financial instruments isn't as easy as it is for other parts of the world. Now, for
Mm-hmm.
them, this asset class is an absolute game changer. It's an absolute necessity for them because it helps them diversify their wealth, save their wealth. It allows them to kind of convert their hard work and labor and sweat into something which is meaningful.
Mm-hmm.
Otherwise, many a time, inflation, hyperinflation just erodes any
Oh yeah.
worth of the money. So this technology or these asset classes have strong opportunities in these types of emerging markets. And in
Mm-hmm.
addition to that, the benefit of tokenized assets is now we can it's fractional ownership, which sometimes is not easy and not always
Mm-hmm.
accessible. Now you can access high kind of investment grade, institutional grade kind of products via fractional ownership. So you can get
Mm-hmm.
something as small as literally a cent, right? You're gonna get access
Mm-hmm.
to investing in a property in Dubai if you
Mm-hmm.
want to via digital assets. So these are the two areas I see that are going to make inroads in everywhere. And sooner or
Mm-hmm.
later, we'll be seeing more tokenized assets. We'll be seeing AI, of course, being more and more embedded into our day to day, and that will just have an entire economy behind it.
Mm-hmm. Yeah, there are a lot of things coming up, and more reasons for people not to sit on the cash. As we said earlier, sitting on the cash is not the best thing in the world. Let's put it that way. Because it's not a baby that's going to grow. It's gonna baby that's gonna go always stay a baby, and we adults are growing. My last question, how do you see Sharia governance adapting to new assets? Again, like as we were talking, like AI-driven investing, or ESG funds. Are these naturally aligned? Uh,
Yeah, it's a good question. So, from a Sharia
mm,
governance perspective, I think there's work to be done. So, my PhD that I've just completed now focuses on artificial intelligence. So,
hmm
I've developed a Sharia governance framework for AI. This is something that I think will need a lot of work, and it's what I call a scholar in the loop. Scholars will have to be part of the training of artificial intelligence and oversight of AI. In addition to that, digital assets is again another area where there's very little Sharia discussion happening, but that which we're seeing a change now in the last 2 years, literally, where more scholars are now opining, thinking, adding value, because these technologies and these frontier asset classes, it requires tremendous amount of intelligence being contributed to the discussion. It's not it's not just one person's role or job or even possible for one person to come up with all the answers. It's not how these things work. So it's really good to see a pool of knowledge and a contribution of knowledge and everybody putting in. So no matter who opines what you add, the fact that we're thinking and we're thinking about tomorrow and how we can make tomorrow better is the best thing about this. Whether whatever your conclusion is, wherever it leads you, but just putting some thought behind it and contributing thought, that that thought capital is really powerful in the intelligence space because that allows new knowledge to be created. So knowledge creation is really a key driver, and that's why from my personal perspective, I see more and more scholars discussing digital assets and similar frontier kind of developments. It's very pleasing for myself because personally I have a passion for reviewing and addressing these types of technologies and studying them. It's just something that I naturally enjoy. What's the point of learning and studying if you can't apply that knowledge, right? That's what I feel always. But I really like it when scholars come and they disagree or they debate or have something a different view. It just allows yourself to self-review, and it adds value to me always when a scholar says something different, because then I get a different perspective on an issue which I would not have had. So it's always welcome.
Well, that's when great minds get together because, as you said, it's information time. It's intelligence, like it's an AI, right? And if you don't get together and having your thoughts and agree, disagree, and agree not to disagree, whatever the case might be, more thoughts coming on the table, the better it is. Mufti Faraz, that takes me to the end of the questions, and I hope for our audience that we addressed all the questions. So what we did, we gathered them all in main topics to address them, and we literally have 5 minutes with Mufti Faraz. And if you have any questions, please post it now, and so we can get the opportunity to answer it. So I'll give it a minute for you to type, and if not, we will conclude. All right. So before we wrap up, I want to sincerely thank Mufti Faraz Adam for sharing his expertise with us this evening. Mufti Faraz, your insights into Sharia-compliant investing, protection, and the future of Islamic finance have been invaluable. To everyone who joined us, thank you. Thank you for giving us your time. And in just 40 minutes, we explored how portfolios can be structured and return comparing and, how families can protect themselves with the Sharia compliant solutions and where innovation is taking us next. Thanks again. And we'll be sending out a short survey after this webinar. And I'd greatly appreciate it if I would appreciate your feedback so we can continue to make these sessions as relevant and as practical as possible. On that note, I wish you all the very best in your financial journey. Thank you again, and we look forward to welcoming you at our next webinar. Mufti Faraz, thank you.
Yeah, you're most welcome. Thank you so much
Really
for
appreciate that.
You're most
Thank you
welcome.
very much. Enjoy your evening. Goodbye.